So welcome back. And now we have our last session entitled Creating Value, Changing Lives, Customer Focus. This session is hosted by Microinsurance Network, and your facilitator will be Katharine Pulvermacher, Executive Director of Microinsurance Network. Katharine, over to you.
Thank you, Climbie. Thanks so much. And welcome, everyone. I mentioned some words about the Microinsurance Network in the opening session, but just to remind you, we are a global nonprofit organization with members around the world, and our focus is driving the agenda for inclusive insurance to ensure that low-income customers and small businesses can have the resilience and access to insurance that they need in order to have sustainable and more comfortable lives, and especially with an emphasis on avoiding people falling back into poverty. So we're very well aligned with the purpose of the conference, and a thank you to the MIN team who has been providing the technical backstopping yesterday and today, and for this session as well. A few points about housekeeping before I get into the meat of the session. Today's session will last 90 minutes. We will end at 12:30 sharp, and it will be followed by the closing session where Climbie will be providing a wrap-up and a summary of all 4 sessions that have taken place over the 2 days. If you would like to submit a question, please use the Q&A feature that is at the bottom of your screen. Don't use the chat for this. Please only use the chat if you have technical issues. And you can message them an executive team who will help you with great pleasure and technical skills and prowess. Should you wish to speak, please use the raise hand icon, which you can see at the bottom of your screens if you hover the mouse over it, and then lower your hand once you have spoken and mute yourself thereafter. You will have noticed that we are recording this presentation. Please be aware of that. If you have a problem with that, we do have to record it for note-taking purposes and various other reasons. And the slides and the recording of the presentation will be uploaded after the event onto the conference website in the coming days. So I think that's it for housekeeping. And maybe if we could go to the next slide, Gemma. I'd like to welcome all of you to this topic. And we have some international experts who are going to share their insights and experience with you. I think it's going to be a truly interesting session. We heard yesterday about the importance of trust when it comes to uptake of insurance. And what we'll be doing today is focusing on what really matters to consumers. What are different ways to build their trust, both from the point of view of customer experience, but also from the point of view of speaking plainly, using plain language, plain, clear, and unambiguous language. So we're very, very fortunate to have with us today Monnida Musicabud from Asia, from AXA in Thailand. And Monnida is a total expert on customer experience. So you'll be learning some very, very interesting views and lessons from Thailand and the Asian region, and understanding a bit about the pain points in customer journeys and what insurers and distribution partners can do to make that experience a pleasant one and take into account customer needs. Rossi is wearing 2 hats today, so she will be known to some of you since she has 2 hats that she will also be speaking about, and she'll be focusing on the need to understand consumers better, particularly through consumer surveys, but also through the types of language that is used and the levels, understanding the levels of financial literacy that need to be overcome. And financial literacy doesn't just apply to emerging customers. Many of us, when we read our insurance policies, are quite confused. And then again, very happy to welcome Philip Stoop and Michelle Louw, both law professors at universities in South Africa. They are experts. They have done quite a bit of research and publications on the use of plain language and how different regulatory regimes approach that and why it is so important. And they have, of course, a particular insight from South Africa, which is not just a very multicultural country, but also, as you know, has significant socioeconomic challenges in terms of very different levels of income and education throughout the population. So without further ado, I would like to hand over to Monnida. Monnida, please take it from here.
Hi, hi everyone. Thank you. Please allow me to yes, sharing my slides. Okay, just want to make sure that can you see my slides?
Yes, that's great. Thanks, Monnida.
Okay, thank you. Very nice to talk to you today. And today I want to share with you on the customer journey, what we did and what we are doing in AXA. And before we start, I just want to ask the organizer to help me put the questionnaire up on the screen in order to ask for your inputs on some polls that you know. The question would be, have you ever bought any insurance online? It could be life insurance, it could be, non-life insurance, general insurance, any kind of insurance. I will give you some time to put in the votes. Usually, when we run these sessions, we will be very surprised that even though we discuss about buying insurance or customer journey and customer experience to buy insurance online, a lot of us never buy insurance online. So it would be very interesting to see the result of this. Not sure, do we have like enough people to vote on this? Maybe I can move to the next question. Yeah. Okay. The next question on this would be, if for those of you who answer that you have, bought an insurance online before, what would be the reason of buying insurance? Would it be because of it's more convenience, or because the customer journey is great, or because insurance online products are usually like cheaper and you see that it's more value for money, or you feel like it's very trustworthy and you trust that the data privacy issue is fine, or any other reasons. So I will allow you some time for you to answer on these questions. Yeah. Usually, when people buy insurance online, there are more than one reasons to persuade them to buy. But it would be nice to see from this audience, what are the main reasons for you to buy insurance online? Okay. Then the last question that I would like to ask, for those of you who answer no, you never buy insurance online. Why? What would be the reason? Would it be because, I think insurance is just too difficult to understand, and you might need someone to talk to. Either it could be like telesales or agents staff, or any face-to-face advisory channels, or you don't trust in terms of the platform, or you don't think it's convenient, or you just don't buy insurance, period. I hope the last answer wouldn't have a lot of people to answer that. Yeah. So we at AXA, we also have done this kind of poll to our actual customer, and I will show you later on what's our customer, how our customers answered. But if for now, if we can have the result, I'm not sure, Katharine, if we can see the result of the survey. Yeah. See, this is interesting. So for the past 2 days, we have been talking about digital insurance, and this is not normal, not uncommon. Most of the webinar that I have arranged, more people who never buy insurance online than people who have bought the insurance online. I mean, if we're gonna launch the digital insurance, I think if we never experience it ourselves, then it's gonna be very difficult for our customer to make a decision to buy insurance online. The next answer for the second question, please. Okay, so yeah, the main reason for people who buy insurance online is because more convenience, and maybe other reasons as well. But this is quite aligned with the market studies, which is that a lot of people decided to buy insurance online because it's very convenient to them, especially the younger generation. So generation like the first jobber generation, or people who are like in the workforce for not so many years, they would prefer maybe not to talk to the agents, but rather, you know, go online. This is because of the culture when they grow up, and to buy other stuff as well. Then the last, the answer for next question, please. Oh, I'm relieved that nobody's answered the last question. So people still buy insurance, but I think 60% of people who answer saying that you know, I think the insurance product is too difficult to understand, you know, and probably need someone to explain to. And this is very aligned with you know, with our research. So okay, yeah, you know, like our group today, I believe that this is not even emerging customer segment. We are maybe more affluent or upper mass segment, the participants. But when you talk about, imagine about emerging customer, if the mass segment where they don't have a full understanding of insurance, how difficult it is for them to adopt or to get insurance protection to protect their risk from digital channels. So that would be a quite a difficult challenge, but rewarding things for us to think about. Emerging customer, as we all know, that they understand the risk. They wanted to manage their risk better, but there are a lot of barriers for them to get insurance products. So for example, like, you know, the main reason is like they don't understand the coverage. Their commission from our distribution channel is too high, resulting in the price is going to be too high to be affordable, and all that reason. I want to share with you, I won't go into details, but I just want to share with you in terms of our AXA customer research on have they ever buy insurance online, and or have they ever have insurance at all. And this research we have done with our telecommunication partner. So we in Asia, there are customer who are prepaid customer and postpaid customer. Prepaid customer are people who top ups in their mobile phone, but postpaid customer are those who paid at the end of the month on their bills. So the inclusive insurance is targeting on the prepaid customer, and you can see that about half of the customer have never have insurance at all, any kind of insurance. And the main reason that they don't get buy insurance is because there are other commitments, and they never see any product that they can understand or affordable for them. So in terms of buying insurance online, if you look at number 2, we ask our customers that why don't you buy insurance online? And this is the emerging customer who are in the mass segment in Asia. Then we can see that the highest percentage of the reason is because the payment process is too difficult. We have to understand that, like in Asia, not all of people can have access to banking systems, or even sometimes mobile wallets. It's different country by country in Asia. But the main reason that they say that they don't want to buy insurance online, not because of don't understand the products, but because the payment process is just too difficult. Most of the and the insurance product complication is on the left side, which is 15%, still less than the payment process. So that's why it leads into why customer journey is important. The customer journey, end-to-end customer journey, as for the past 2 days we have been discussing, from like I aware, I buy, I pay, I am covered, I claim, and I engage. Each steps of the customer journey resulted in the drop off of the customer, because if we cannot capture the insights or the key success factor to make each stage work, the end-to-end digital customer journey won't work. So for example, I'll give you some example for example, like something like on iPay, when the customer who are also the bank customer as well, they are afraid, they don't want to walk into bank branches because their transaction usually are too low. So they would rather use other means, or other like digital wallet or their mobile phone top-ups to pay for insurance, instead of just walking to the branch and ask to buy the insurance product that is very low ticket size. So those are the things that we have to consider in terms of customer behavior or perspective. At AXA, we make sure that the customer can really understand their product, and they can really see the product in their lifestyle. So we're not going to put our product just on our websites, because like Richard from Microinsurance mentioned before, nobody's wake up in the morning and want to buy insurance. But if they wake up in the morning and they see the communication on the consumer products that they have to buy every day, and there was insurance inside there, that is something that to help them to like really see the product more. Or because if the digital insurance right now, we kind of get rid of all the documentation. It's helped insurer and distributor to reduce the operating costs, to make the product more appealing to customer. But we are giving away or trading off with the information that customer will have, because each customer will receive SMS and emails every day. If we send the policy wordings through the digital means, the customer sometimes can't remember where they keep the policy wording already. So it is our roles to have actively communicate to our customer that, hey, don't forget that you have this insurance. And also like reminding them that, hey, don't forget to claim, because that's the moment of truth. So we actually send reminder to customer, to claim for the product, to remind them that they have this coverage. I just want to share our actual project that we have launched with our partner, which is part of Telenor Group, which is called DTAC in Thailand. We have just launched the online selling journey, and to see it in action, I have mapped it with each journey. What did we do? So the first step, I aware. So we communicate this not just only, like I said, not just in our AXA area, but in our partner application. So Telenor application that there's a personal accident product, but tying it up with mobile health service. So our mobile health service, including COVID-19 symptom checker. So if the customer buy the insurance product, they get free teleconsultation and COVID checker, symptom checker as well. So that's kind of bundle it well into the current situation, because like in Thailand right now, it's very difficult to have a test for COVID-19. So if the customer call, the service provider can book the testing site for the customer. So that kind of incentivizes the customer to like try the product, try to buy the product online with this situation. Another thing about iAware that we did is that we conduct the A/B testing for communication. So with our regulation saying that, any communications, you need to get through the compliance to make sure that the communication is aligned with the regulatory requirements. And instead of we doing it in terms of like one by one, we communicate, revise and communicates again. We prepare a lot of communication messages and we launch it to a different targeted customer, and we see which one is the best response in terms of communication message. So then we can learn what would be the best communication message for the customer, for each customer segment, and that can help us in terms of like changing the message quickly. If today COVID-19 communication doesn't work, or the COVID situation get better, we will have to keep improving what would be the message that we will communicate to the car to capture to the customer to capture the attention. Then I buy is also important in terms of how many information field that you request for customer to fill in, or even sometimes how can we put the customer information field request as required by regulator to be the minimum. For example, can we pre-fill it for the customer if the customer has registered with our system before? Can we just put in just a district or sub-district and province without having to or zip code without having to put in the address? And this is a conversation that we need to have with the regulator as well. How much that we can reduce the data fields in the process. Like we have tried and learned that every field that we put into the journey, the customer will drop off about 25% of the time. So the more field, I understand that we want to get more information for data analytics, but that's the balance. How can we balance with data analytics? Can we put in some analytics tools, tech, where we don't have to ask for more information from customer? iPay, for iPay, as you can see in the research, that if we provide as many channels of payment method as much as possible for the customer, the better. With telcos, we added into the telco bills. Every month, if they have to pay for their mobile phone bills, they pay for insurance bill as well. So that's helped the customer don't have to add more another things to pay at the end of the month. something like that. I'm covered and I claim and I engage. So I covered is something that like we give the customer like information, confirm that they have that they have the coverage already, and as I say, like for them to have a reminder of the coverage that they have. I claim and I engage is something that when they claim the first moment of truth, what are the digital channels that they can claim through chat line, and just capture the picture and send it over to insurers and claim, or online digital claim channels with the chat with the chat function that can be available. So that's all from my part. And thank you so much. I hope I made a good timing.
Yeah, great. Monnida, maybe while Rossi's getting her slides up, I can ask you a couple of questions.
Sure, definitely.
So the one thing that I'd like to say and really bring out from what you've said, because it struck me whenever it was about 3.5 years ago when we were at an event in Sri Lanka, you made the point that you actually want to pay the claims because you believe it's super important to pay the claims, especially with immature customers, if I can call them that, new customers, so that they understand what the insurance does. Now, that's a very, very different attitude from, I think, most of our experience of insurers, if I can say so, not necessarily my personal experience, but do you find that really does drive business? And
definitely, yeah, because with insurance, the moment of truth for customer is claim. Before that is just marketing, but the customer will really stick with us when they claim. So that is a real moment of truth for customer. Like and with the mistrust in insurance, the important things is you find the good partners whom the customer trusts, but at the same time we have to deliver our promises, which is
absolutely
paying
exactly it. It's a promise, isn't it? And delivery.
Exactly.
And then just very quickly, you mentioned also during your presentation that so during the time of COVID, you've been providing messages about COVID and screening and tests and so on. And you also said, maybe there'll be a day when COVID is less important or the situation is better, and then you would switch the messaging. How do you know when and how to change the message from a technical perspective?
Yeah, so from the technical perspective, we track the response rate, end-to-end response rate of our messages, impression, view, click-through, conversion, drop off, bounce, every parameter that we can track. So we can see the trend, and we can track this on a daily basis. So we can see the trend that if these messages is starting to dip, the conversion rate is starting to dip, then we know that that's the moment that we have to try out other message or communication. The key success factor would be how fast that we respond to the market, especially on the digital markets nowadays. If our customer communicate the same message, even though the COVID is still there, we might have to rethink about the new message as well. And from direct experience, we launched this. At first we say, oh, you can check COVID-19. The conversion rate is very low. We change the message into, do you think you have COVID?
Yeah,
already. Then it changed. The conversion rate changed dramatically. So it's about I think what Rosie gonna mention next as well. It's about power of words, right? How can we relate or communicate to the customer as well?
Yes, and ongoing iterative consumer market research, I guess. So I think that's a really, really good segue to hand over to Rossitza.
Thank you.
So thanks so much, Monnida. I'm sure there'll be questions. We'll have the Q&A later on. So without further ado, it's a great honor to have Rossi Wartonick on our panel today. Rossi is Executive Director of Financial Literacy of the Financial Literacy Initiative Foundation, and she's also the Communication and Financial Education Advisor at the Association of Bulgarian Insurers in Bulgaria. So Rossi, over to you.
Thank you, Katharine. And first of all, I would like to thank the organizers for the opportunity of to attend and to be part of this really interesting and meaningful conference, I have to say. I cannot agree more with what Monnida said, and I'm very happy that the focus is on the consumers and consumers' experience, and also to look through the motivations, and the barriers that the consumers need to overcome in order to get the protection they need. And I'm sorry, as a actually CEET representative, I want to share some findings from a survey, the nationwide survey that the Association of Bulgarian Insurers conducted last year. And I hope actually it will be very relevant and useful for the audience, since CEET countries more or less we share common characteristics. But let me start with two numbers.
Rossi, I'm sorry to interrupt you. Could you go full screen so that the slides are larger?
Absolutely.
Thank you.
I'm sorry.
No worries.
So the two numbers actually show very clearly where Bulgaria stands. And I suspect it's the same for many countries from the CEET region. So the level of insurance coverage is actually not that high. 2.4% is the insurance penetration in Bulgaria for 2020, and it was the same 2019. And you can clearly see that actually it is 3 times less than the average level of insurance penetration for EU. And of course, the reasons are various, and they are linked also to the historical development, to the fact that we didn't have market economy for extended periods of time, and it led to kind of over-dependence on the state and lower personal responsibility. And actually, we witness these situations every day. Even 2 days ago in Bulgaria, there was a severe hailstorm in one of the most productive, let's say, agricultural region. And what happened was that farmers, they did not have insurance protection. They didn't have insurance. And now they want the state, and they require the state to cover their losses 100%. So we are witnessing these situations every day, but the big question actually is what to do in order to change the situation. And of course, the way to approach it, it's quite complex. And I think that along with the regulatory, legislative measures, along with improving the business processes and digitalization, along with developing products that fit better the client's needs and improving the distribution, we also need to look actually through the eyes of the consumers and to see what motivates them, what are the factors that contribute to usage of insurance products. And I want to share some findings from the survey that actually are relevant to the factors contributing to the level of insurance protection. First of the findings is not that, how to say, unusual. There is direct positive correlation between insurance literacy, the level of insurance literacy, trust toward the industry, and use of insurance products. Clearly, we see that the respondents from the survey with the high level of insurance literacy, they do trust insurance industry, and almost 100% of them, they use insurance products. The opposite is also true. And what is more troubling is the big gap between the two groups. And for example, it's not also surprising that the respondents with low level of insurance literacy, they are associated with demographic groups that are vulnerable, low income, low education. And you can see that the trust level is like a 14%, almost non-existing. The insurance product usage, 44%, which basically is linked to the obligatory motor insurance and PTL insurance. And if we take these numbers apart and this type of insurance apart, the usage will be substantially lower. So I think it's a really a problematic gap, and it cannot be addressed, the problem, with low, very low insurance coverage and low trust level of these vulnerable groups. This problem cannot be addressed by one stakeholder, one player only. And it needs combined efforts of all of the stakeholders and policymakers, regulators, industry, of course, NGOs, because it is really a problem for sustainable development. So let me move to the trust. Trust is one of the factors that really influence on the decision whether to buy or not to buy insurance. And yes, we found out some positive developments, like, for example, the level of trust is prevailing over the level of mistrust, which was not the case in Bulgaria 10 years ago. We also found, with some surprise actually, that people, and majority of people, recognize the importance of insurance products. Close to 80% of the respondents believe that the insurance provides security, and it is not a necessary expense, and also it can cover you from unexpected expenses. At the same time, though, we found persisting negative beliefs within the respondents and respectively the population that contradict the real experience, and I will briefly mention some of them. We know that claims payment is the hottest issue for the consumers, and there are always big complaints about that. What we found out is that only 5.4% from the respondents who have or ever had an insurance, they had problem related to claims payment. It's not that big number actually, but 6 times more people, 33% actually, believe that insurance are not fair in regard to the claim payments. You can see that the quite substantial discrepancy. At the same time, as I mentioned, 80% of people believe that insurance products are good for them in general terms, 80%. But still, 60%, close to 60% of people, they buy insurance only by obligation because, and it is mostly, again, NPTL insurance. The other interesting point is related to the price. Of course, clients, customers are sensitive to the price, but also we saw there some interesting, let's say, developments. The price is, of course, leading criteria for selection of a product. 80% of people say this is the leading criteria. And in the association, we perceive it as a problem because it's not a rare case when people buy the cheapest product and it doesn't fit their needs, and it leads to consumers' disappointment, and it leads to giving up buying insurance coverage, buying insurance. The other aspect of the price matter is that most of every second Bulgarian, even more than that, believes that insurance products as price are not affordable. But the real situation on the market actually says something different. And here I want to give you an example for the basic home insurance in Bulgaria, how much it costs. It costs 20-30 euro per year, which is less than 2 euros, or a little more than 2 euros per month. It is basically 2-3 loaf of bread, for example. So it's in reality, these products or the basic products are not that expensive, but consumers perceive them so. So actually, we drew a lot of use from these findings, and now the association in all the communications, public communications, we have this message to the public that first of all, you have to choose smartly, do informed choice, and find a product that meets your needs. And the second is we give just simple examples that insurances and the basic insurance products are quite affordable. Now, the other factor that contributes and is related to the usage of insurance products, it's not again surprising, is the insurance literacy. And this is not only actually the data from the survey and from other surveys that say so. Respondents, people believe the same thing. Over 50%, 53% of Bulgarians believe that people don't buy insurance because they don't understand it. And the same situation, the same conclusion was in the survey that Monnida showed before me. So apparently, the lack of understanding and basically the fear that the product is complicated is one of the barriers that should be overcome by educational methods. But back to the level of the insurance literacy, in the survey we had a specifically dedicated part that measured the insurance literacy, and the situation is not overly optimistic. We registered general low to average level of insurance literacy and awareness. But again, the discrepancies, the differences between the demographic groups are really, really big. They may go to 30-40% between certain groups. So clearly there is need to this gap to be addressed. And let me just give you some numbers to illustrate what I'm saying. Almost half of the respondents, 47% of the respondents, self-evaluate their knowledge as low or not existing. It means basically every second Bulgarian. And actually, the results from the objective survey more or less confirmed the self-evaluation. Even the most basic insurance terms that are very much related to the understanding, the basic understanding of the product, are challenged for a large portion of the population. For example, 44% know what is sum insured sum. It means that 56% of the population, more than half, they don't know. The situation, for example, with knowledge and information about life insurance is even worse than that, and actually it goes beyond the vulnerable groups within the high segments of the segments with the high education, high income. Only, for example, 1/5 of the population know that life insurance is also a tool for saving and investing and provides tax reliefs. So clearly there is need for substantial intervention in terms of improving the level of insurance literacy, financial literacy, in terms of improving and building upon the positive image of industry reputation and trustworthy industry. And actually, the Association of Bulgarian Insurance created a communication strategy that focuses on this area. And I will briefly just mention a few of our instruments, tools that we already implemented, and they are quite successful. One of them is the online quiz, Your Insurance IQ. Actually, it is an online tool that provides assessment of the basic insurance literacy, and at the same time, it has an educational part. And we are actually very happy to see quite substantial interest toward this tool, even without big promotions. Since April this year, we have over 3,000 registered participants, which for Bulgaria, it's quite high number. And the other tool that we use a lot are the media campaigns. I will just briefly mention one of them, that has focused on travel insurance and COVID-19 coverage. It started in midsummer in 2020, ended at the end of 2020. And I mention it because actually we saw with this campaign substantial change in the market performance of this type of insurance. Just to mention that in June, when we started the campaign, there was a significant drop in premiums of travel insurance. Easy to understand, pandemic and all of this. The drop was like 40–50%. At the end of the year, on annual basis, at the end of the year, actually, this drop was overcome, and this line of business finished with about -4% drop of the premiums on annual basis. So I'm saying this, and with this I will finish, that apparently the education and communications should be are instrumental and very important in the mix of tools that we need to create in order to intervene positively on people's behavior, on consumers' behavior, in order to achieve better protection for them and better life for them at the end.
Rossitza, thank you so much. While we're running slightly over our timings, I wondered while Philip, you get the next set of slides up on the screen. Rossi, you mentioned about the home insurance and that it was only 20 to 30 euros a year, and yet people somehow still think that's expensive. To what extent do you think that is because they see insurance, mandatory insurance, as a form of tax? So it's a kind of grudge payment.
Actually, home insurance is not obligatory, and I think that people have they just don't know or they don't have enough information on how expensive it is in reality. And then there is no, I guess, tradition when I mentioned that there is this kind of a lack of personal responsibility and over-dependence on the state. People have this mentality, probably it is part of the problem, that they just say, okay, maybe it won't happen to me, or if it happens, I will turn to the state to help me.
Great, thank you. That's also a very useful insight, I think, particularly for the CEET region with its specific political economy and history. I'd like to welcome Philip. I'm going to introduce both Philip and Michelle at the same time. Professor Stoop is head of the Faculty of Law at STADIO, which is a private higher education institution in South Africa. Together with Professor Kelly, has published, as I mentioned earlier, some very interesting work on plain language, use of plain language and financial literacy, and how that is dealt with in different countries around the world. And they also have particular insights into dealing with financial literacy in situations where you have consumers with different levels of education. I'd like to mention that Michelle is a professor of law at the University of South Africa, UNISA, and she's also president of the International Association of Consumer Law. So without further ado, over to you, Philip.
Thank you very much for the opportunity. So I'm going to start by introducing Peter. Now, this is Peter, and he's an average and hypothetical South African consumer. He's literate, and he has many things on his mind, such as sport, his boss, money, politics, and TV programs. So what he does is he enters into several contracts on a daily basis, buying a bread at the supermarket, petrol at a filling station, and meat at a butchery are just a few examples of simple contracts that he enters into. Buying a car on credit and entering into insurance contracts are examples of more complex contracts that he often enters into. So all the goods and services that Peter uses and their distribution have at heart a contract. So without contracts, Peter can actually not exist. In fact, the law of contract underpins our society, and my opinion is that without contracts, ordinary life cannot exist. So Peter has in recent years entered into many standard form contracts, of which he often does not understand the contents. So he's upset and no one wants to assist him. He has been informed that Section 22 of the South African Consumer Protection Act makes provision for a right to plain and understandable language in all consumer contracts. So the aim of this lecture is to give an overview of Section 22 and specifically the definition of plain and understandable language in the Consumer Protection Act, and to give a short introduction to financial literacy. First question that I'll answer is, what is plain language? Is plain language attached to a specific language? How is it assessed? And then financial literacy in Australia and South Africa, and the role of plain language in financial literacy. Before I continue with my discussion of the right to plain and understandable language, I just want to briefly mention some of the basics of the common law of contract, just as a background. The first aspect is the requirements for the formation of a valid contract. And there are small illustrations to illustrate it. Consensus is the first one, capacity to act, legal possibility, physical possibility, and formalities. So the problem is that in a modern world, contract parties such as Peter seldom have any say in the contents of standard form contracts, and they actually no longer negotiate. So what then happens is that unfair situations are created where there's actually no consensus, where consumers are sometimes not aware of the existence of specific contractual terms or risks, and where they can't negotiate more favorable terms. So to address these imbalances, fairness legislation, such as the consumer protection, is usually promulgated. So how does fairness legislation work? Contractual fairness can be divided into substantive fairness and procedural fairness. Procedural fairness can be divided into transparency and disclosure or information. And transparency can be divided into transparency in relation to the terms and transparency in the sense of not being misled. So plain language actually falls under transparency in relation to the terms. So that brings us to section 22, and I unfortunately have to go through it. I've tried to make it shorter by using my own words. So section 22 of our Consumer Protection Act says that the producer of a document that's required in terms of this act or any other law to be produced, provided, or displayed to a consumer must produce, provide, or display that document, A, in the form prescribed in terms of this act or any other legislation, if any, or in plain language if no form has been prescribed for that document. 2, for the purposes of this act, a document is in plain language if it is reasonable to conclude that an ordinary consumer of the class of persons for whom the document is intended, with average literacy skills and minimal experience as a consumer of the relevant goods or services, could be expected to understand the content, significance, and import of the document without undue effort, having regard to A, the context, comprehensiveness, and consistency of the document, the organization, form, and style of the document, vocabulary, usage, and sentence structure, and the use of illustrations, examples, headings, or other aids to reading and understanding. And then the Commission, that's the regulator in the consumer industry, may publish guidelines for methods of assessing whether a document is in plain language. I'm not going to look at the structure now. So that brings us to the next questions, and that is which documents must then actually be in plain language. So it's quite clear any document required in terms of this act or any other law should be in the prescribed form, and if the act does not prescribe any form, a document must be in plain language. So this section applies to documents required by legislation, any visual representations, and any written consumer agreements, and obviously not oral agreements. So what is plain language? Again, it's language that enables an ordinary consumer of the class of persons for whom it's intended, with average literacy skills and minimal experience as a consumer of the relevant goods or services, to understand the content, significance, and the import of a document without undue effort. That brings us to the second part of the definition that lists factors to be taken into account when determining whether a document is in plain language. And we will go into more detail now. So the first part of the definition refers to an ordinary consumer. So that indicates that not only lawyers and judges should be able to understand the document. An ordinary consumer of the class of persons for whom a document is intended indicates that suppliers will actually have to draft more than one set of standard form contracts for a specific situation to cater for the consumers for whom it's intended. So the essence is that suppliers must actually know their target audience in advance and can actually test it on the target audience. That takes us to average literacy skills. That implies that the document must cater for the average South African consumer from the target audience. So one opinion is that one should not attach significance to literacy studies or literacy statistics, because the supplier only has to consider the average literacy skills of the class of persons to whom goods or services are supplied. But other scholars and the National Consumer Tribunal, that's our consumer court, are actually of the opinion that average literacy skills refers to the average literacy skills of the entire country, and general statistics should therefore actually be considered. Literacy means that the consumer has at least some basic reading and writing skills, but of course, mere literacy skills does not necessarily equip a consumer to understand business and legal documents. So another thorny question is, and I will come to it again later, is whether the literacy of the target audience is attached to a specific language, and that's extremely important in a multilingual country like South Africa. And that takes us to the next one, minimal experience as a consumer of the relevant goods or services. This indicates that drafters should actually write for first-time consumers of particular goods or services. So drafters of contracts should actually focus on the consumer with the least experience and not just the average consumer. But I have to highlight that it's clear from the Act that it refers to minimal experience and not to no experience. Content, significance, and import indicates that consumers must not only understand what the document says, but also how it applies to them, its significance, and its effect. In other words, the consumer must at least clearly understand the legal consequences of a specific contract or terms. Without undue effort indicates that if a consumer actually needs to consult a legal advisor or even a dictionary to understand the terms of a document, it would be considered that their understanding cost them undue effort, and the document will then definitely not be in plain language. But again, I must highlight undue means excessive, and that requiring a certain amount of effort does not necessarily make the effort undue. That brings us to the second part of the definition. In terms of the second part of the definition, things or specific aspects are listed that must be taken into account when assessing whether a document is actually written in plain language. So the first aspect is context. Now, context indicates that it's necessary to take account of how and when a consumer reads a document or how the document is used. So it can be taken into account what the consumer would reasonably be expected to know from previous transactions that he or she entered into. Comprehensiveness indicates that a document must actually give full information. It also indicates that it's not only necessary to take account of how a document is written, but also of what is written. So the contents of a document should actually be considered and enable the consumer to make an informed choice. Consistency is quite straightforward. It indicates that the terminology and style must be consistent throughout the contract. It indicates also that it's necessary to take account of how the document is drafted. So aspects such as consistent use of terminology, headings, and sentence structures are just examples of factors that can be considered. Organization, form, and style then refers to how a document is structured. For example, no hidden small print should be used, and important information should be highlighted or included in the top of a document or put in text boxes. Vocabulary usage and sentence structure refers to general readability principles, such as using short sentences, the active voice, personal pronouns, and short words, and avoiding technical language. The last aspect is illustrations, examples, headings, or other aids to reading and understanding. And this factor refers to devices to make a document more inviting and to good techniques for communicating complex information. So now that we've analyzed the plain language definition, I shall return to the question whether documents should be provided in the language of the consumer in order to comply with the plain language requirement. And I'm not going through the detail. I just want to highlight that in terms of our National Credit Act, that's the legislation regulating consumer contracts, consumer credit agreements, there is a right to receive a document in a consumer's official language, as long as it's one of the official languages. But the Consumer Protection Act does not have a similar provision. But our constitution, that's our supreme law, states that all official languages must actually enjoy parity of esteem. And I just want to mention that we have 11 official languages. Now, in South Africa, English is regarded as the so-called lingua franca, but isiZulu, Xhosa, and Afrikaans are still the most spoken languages. So the question remains actually, how will a supplier actually comply with Section 22 if a consumer does not understand the language used in documents? And the answer is the contract will actually not be in plain language if the consumer can't understand the language Then assessment of plain language, and I've said that. The National Consumer Commission, our consumer regulator, may publish guidelines for methods of assessing whether a document is indeed written in plain language, and they haven't done so. So we're still waiting for that. Then I just want to highlight in Pennsylvania, they have visual guidelines for plain language in consumer contracts. I'm not going to go through it. I just want to inform you about it. And then in the state of Connecticut in the US, they actually follow an alternative objective approach to test whether a document is written in plain language. The issue of that is that it's not concerned with the individual consumer, and it's perhaps too objective. And if you comply with these requirements, it does not actually mean that the agreement is written in plain language. So to conclude, if you draft a contract, if you want to comply with Section 22, you have to know the target audience and the purpose of the document. And then the literacy level and the choice of language definitely forms part of the context, and they have an impact on compliance with Section 22. And then lastly, we still need guidelines to assess whether a document is written in plain language. And from that, I'll give over to Michelle.
Thank you, Philip. Now, if we look at financial literacy goes hand in hand with plain language, not only in documents, but also to use that as financial literacy. Now, if we look at Australia, Australia has been very active in the field of financial literacy to their population. Generally, in Australia, there's an obligation to promote informed participation of the financial consumers, while in South Africa, we focused more on the education of consumers, which is totally different from participation in the financial sector. Now, the Australian obligation is concerned with the financial system as a whole, while South Africa in the past was generally focused on general financial education as a tool. Now, what is financial literacy? Now, financial literacy is really the ability to understand how money works, how a person can earn money or make it more. Included in that is also to protect yourself against risk. And it really refers to the set of skills and knowledge that allows a person to make informed and effective decisions for all their financial resources. Now, if we look at financial literacy, it is among a number of strategies directed towards nudging changes in consumer behavior. It sits between the old model, regulatory model, which relies on disclosure of information for effective and rational decision-making, and a newer model which takes into account individual perception and behavioral biases and may seek to accommodate these by imposing obligations on financial service providers. To elaborate on that, in the past, what we used to do, and a lot of industries and jurisdictions, they will just disclose information to consumers, and then they think that will add to financial literacy and it will make them informed decisions. But that causes, it's basically a lazy form of causing financial literacy, and consumers are always inundated with overload of information. Now, generally in most jurisdictions, there's no duty on a consumer to attain a minimum standard of literacy. It's socially expected from consumers to have a certain level, but there's no duty on them that they need some skills from their own side to have that. Next slide. Now, if we look at Australia, they have the Australian Securities and Investment Commission, ASIC, and they've been very active. Now, they've done a lot of studies on financial literacy, and what they have done and what they have found in many of their reports is that what people think they know is greater than what they actually do know. And they also indicated in a lot of these surveys that people are less confident in investing, superannuation, and retirement products and insurance, and they are more confident and more literate when they do budgeting, crediting, saving, and are dealing with debt. What they also found in these surveys that is consumers have too much information and they have choice overload, and that is that issue of disclosing to consumers. And also they find that information they have to process is complex and the decisions they need to make are complex and uncertain. They are often faced with time constraint and time pressures, and that is reading of documents, especially insurance and complex financial products. They also showed that their overconfidence and underconfidence of people differ, and some people have control problems. They also showed that information is framed or presented, how that is presented can impact their decision. Now, they have industry codes in Australia and they focus on informing consumers of their rights. They've also done banking surveys, many banks have done it, and they found that there are certain factors that impact on financial literacy. And the general things that they found is gender, age, education, household circumstances, financial knowledge, numeracy, and financial attitude. Those all play a role when assessing financial literacy levels and skills. Interesting, they also found that consumers were really not using financial advisors necessarily. They mostly consulted accountants, friends and family that ranked high, then bank managers and financial planners ended up last. They also showed that there was low levels of trust in financial professionals. They also found that consumers usually go to websites of financial institutions and then also the websites of magazines. They did find in those studies in Australia with their financial literacy that people were generally aware of where to lodge complaints and what their consumer rights were. They were less confident with the product use and complicated products. Next slide. Now in South Africa, a lot has been done with consumer education from the government side as well as NGOs, non-governmental organizations, and the insurance industry specifically. However, if we look at South Africa, due to apartheid, we had a very different financial market. We had a market that catered for Black South Africans and a market that catered, a sophisticated system that catered for white consumers. With the abolishment of apartheid, we focused in South Africa, we focused on financial inclusion. So our main focus was really getting consumers to open bank accounts because a lot of consumers were excluded from the formal sector. So a lot of forms of education was focused on getting consumers included with bank accounts. Less attention was paid to insurance and other financial participation. Now we had the South African Financial Services Board. They were responsible for insurance in South Africa. They had an act in 1990 and in 2000 they were given the task of financial education specifically. Now, you can give me the next slide. They joined forces with the South African Insurance Association, and they did a lot of research and financial literacy on educating consumers, focusing on inclusion. What they found in their service, in their research, is that they had to start at the education level of school level. So they focused with the Insurance Association at school levels, they trained teachers and they made that part of the teaching of students. And they thought that is where it should start. They also did a survey and they focused on 4 domain things: financial control, financial planning, choosing financial products, and knowledge. The conclusion of that first survey, they found that a large portion of the South African population were not adequately equipped to make sound financial decisions. South Africa then moved to the Twin Peak model with our banking and financial systems, insurance systems, the same as Australia and the UK. I might mention that we are the only third world country that have adopted the Twin Peaks. As Philip mentioned, we also have a national credit regulator that regulates the consumer credit in South Africa. So the Financial Services Board became the Financial Sector Conduct. Next slide. As Philip mentioned, the National Credit Act came into operation in 2005, 2006, and we focused in that act on getting people included in the market. So we focused on bank accounts, getting them their rights, how to deal with debts. And what the National Credit Regulator did is they did many things. They held websites, webinars, they did workshops, they had conferences, billboards, all the usual things to get consumers educated. Now, our previous consumer credit legislation, and including our insurance legislation, did not really focus on a lot of disclosure to consumers. For credit, for example, only the interest rate was disclosed. And that is, as I said, the lazy form of getting consumers included in the system is just to disclose everything and let them sift through it. But that has all changed. Now, I want to add that the role and value of disclosure is vital. But it needs to be stressed that if disclosure is really ineffective if there are low levels of financial literacy. So if you sit with low levels of financial literacy, the disclosure is going to add very little to the market to get consumers to actually understand that. Next slide. Now, in South Africa, the industry players like insurers, banks, credit bureaus, ombuds, they all took part in this form of financial education and for the consumers. Although it was not a statutory obligation for them, they did take part of that. We also had charters and codes that put a social responsibility of them. The banking industry that informally regulate banks, they have also been active with projects. Now, in South Africa, we have the Finmark Trust. They are outsourced with funding from outside. Now, they do an annual survey in a lot of African countries, Asian countries, and in India. And they started with a scope. And just to summarize that, in the Fin scope of 2004, because of the history of South Africa, we found that initially in 2004, only 64% of the population of South Africa was banked. In other words, had a bank account. And the latest report they did was 2018, and there it was estimated that 80% had bank accounts. Now, from the studies, they also looked at insurance. And what they found is initially that there were low take-in of insurance. But since 2004, a lot of progress has been made, and the insurance the low-income group do take is life insurance, funeral coverage, asset insurance, and health insurance. But they also found that people were not confident with the insurance. And as Rosie had said in her presentation, price was the leading criteria for the selection of a consumer product, of an insurance product. They were less concerned with what was actually insured. The same with our personal payment protection insurance. They also showed that it still remained a challenge. And then if we looked at financial participation in the market, that was at 86%. So a lot of that has been done. Last slide, please. Now, today, as I said, the Financial Services Board became the Financial Sector Conduct Authority when we moved to Twin Peaks. Their duty has changed a bit from just normal education, just giving consumers education, to the same as similar as the Australian duty, where they have to take part in potential participation, which is something different. Now that has moved, so we will see whether our regulators move towards a more active participation on that. Now, the importance of plain language is really very important when it comes to complex financial products, and surveys have shown that that is the area that they do not feel comfortable taking part in that. And lastly, we can all acknowledge that a one-size-fits-all model for consumer education and financial literacy is not really suitable for a hybrid of consumers. As Philip mentioned, we have 11 official languages. We also have asylum seekers, the same as Europe, and that is probably more problematic in a situation like this. Thank you.
Thanks so much, Michelle. So I'd like to thank you both. It's really interesting to get an international perspective. The one question that I've got is a lot of the focus of what you were saying was around banking. Perhaps you could speak to the uptake of insurance in South Africa, and whether you mentioned it in passing, but is the regulator in South Africa, the South African Reserve Bank and FSCA, I think it's called now, they oversee insurance as well as banking. How does that differ in different countries, and what kind of impact do you think it has in terms of efforts to ensure consumer protection?
Yes, so the FSCA, the Financial Sector Conduct Authority, they regulate all insurance products, the market on that. But the National Credit Regulator also regulates a certain aspect of insurance, and that would be, you refer to that in Europe as the payment protection insurance. We refer to that as credit insurance, which is regulated by that. So it's basically two regulators regulating that. Now, what they found from the surveys is obviously abuse in the market as well. They were selling, a lot of insurers were selling payment protection insurance to consumers. For example, unemployment insurance, when the consumer was maybe on pension already, so it was really abuse. So they regulate that very strictly. And how they regulate that is they even went as far as prescribing the set fees that you can charge on consumer credit related products. So there's payment protection insurance or credit insurance. There was an uproar on that, but it is regulated. They also found that consumers in all these surveys that the FinMark trusted is that a lot of consumers now started using certain products as literacy levels changed after apartheid. And they were focusing on funeral was a big thing, funeral policies. But what they found is that consumers bought the same products from different insurers for the same risk. So due to a lack of proper education in the literacy there, consumers didn't really understand that they had policy already, and they did not diversify to other types of products for other risks. And also in South Africa, you know, we don't have a lot of, we have a big group, 75% is the low income group for our demographics. So they do not usually have assets. So they don't usually use the insurance to secure assets or home, because the access to housing is still a problem. So the regulators, what they focused on more was including them into the financial formal sector. But they left at the bay normal insurance. We're not seeing that they've educated consumer usage to the same extent as what they are focused on in credit uptake and credit, how to deal with debt. They did focus in insurance to use the ombuds. If you have a problem, that is always advertised in contracts, etc. But that has been left at the base side. So hopefully now with our Twin Peaks, bigger focus will be given to insurance, because that is still lagging in our demographics.
So maybe picking up on a point that you made now and also in your presentation, you mentioned that a number of people may have more than one funeral insurance policy. Now, as you probably know, the Microinsurance Network conducts a survey every year to try and track the development of the inclusive insurance markets in about 30 countries, and South Africa is one of those countries. And in years gone by, when the study has been done, it showed, for example, that it's very difficult, as you know, with insurance to know how many people are actually covered, but there are estimates that can be done. So if the same individual has more than one funeral cover, and that is a prevalent trend, would that mean that if one simply looked at the number of policies being 30 odd million, it's very likely that actually only 15 million were covered?
Yes, that's possible. Unfortunately, they have not really focused on that. What they did focus on, as I said, was the selling of payment protection, that they were selling insurance to people that did not need that. But they did not really look at that. And they've noted that as an issue. So we'll have to see whether our regulator will give attention to that. But it has been raised, and they've been quite active on stopping. We are very consumer orientated nowadays.
Just in the interest of time, I'm wondering if any of the panelists, if you'd like to ask one another any questions, and perhaps while you do that, I can flag that we see this undersurfacing of emerging customers in emerging markets. So we do see a tendency of insurers to focus on what I could characterize as the low-hanging fruit. So that would be commercial insurance and the more affluent consumer segment. And I wonder whether, well, I gather that is the same in the CEET region. And it would be interesting to get a view from you, Rossi, and others, as to whether the onus should be on regulators to drive this, or whether it is part of the social responsibility of insurers to target a market that is perhaps harder to engage with, but very much more exposed to risk and very much more fragile. Rossi, perhaps you'd like to take that, and then Monnida, perhaps you could speak to that as well, and then we will need to wrap up, but just briefly.
I think actually that it cannot be addressed by a single player, only by regulators, or a supervisory body, it cannot be effectively addressed. It can be, but it cannot be effectively addressed. About the industry, actually what we see is a lot of action, but when we craft actions to improve insurance literacy, financial literacy, we have to be also aware that the business should follow certain code of conduct, let's say, and not mix the education with marketing. This is one of the principles that have to be followed, and probably the state should make, or the regulator, or the combined agreement among the participants in this effort should be made that no marketing and not selling techniques should be involved in pure financial education.
And Monnida, your views on that, please?
Actually, if I may add, this is only one. This is also one of the recommendations. The OECD, that is quite active organization, one of the leading in the financial education area. This is one of the recommendations that they make in terms of developing financial financial literacy initiatives. So this is quite important to follow.
Monnida, over to you very briefly for your view on that.
In terms of regulation framework, is it?
So your view on is the onus on the regulators to create an environment to ensure, to provide this enabling environment and ensure that consumers are aware and literate, or is the burden on insurers? Where should the balance lie? And how can greater collaboration be fostered and incentives aligned?
Thank you. In my view, it's a collaboration between private sector and regulator, in the sense that, for example, the idea of sandbox, where we, as a private sector, to have a responsibility to ensure that we do not make us the customer won't misunderstood on our sandbox product and innovation, but at the same time some leniency of certain regulation that prohibited us to penetrate into a lower mass segment. So I think it's more like a collaboration, and I like the way that it's provide flexibility, but at the same time, for example, in Singapore sandbox, you are given 1 year to put your product into sandbox, and if the sales number or adoption rate is not as you expected, that's mean it doesn't worth to change the regulation. So it's a fair deals between private sector and the regulation framework, and certain regulation might be more difficult to change. That's a continuous conversation. How can we do like risk-based management in terms of if it lower ticket size, lower risk, we might not need to do the customer KYC or AMLO, anti-money laundering. So those are the conversations that in detail the private sector should discuss with the regulator, in my view.
Great, thanks. Perhaps the four of you could just think of a very quick one-sentence closing remark to summarize the most important aspect, in your opinion, of providing value to customers, particularly focusing on this need for understanding who they are, what their needs are in plain language. While you reflect on what you're going to say, I would just like to let everybody know that the report of the survey that Rossi presented to us is available from the Bulgarian Association in Bulgarian. The MIN has organized a translation of that report, and we will notify publication of that in our forthcoming newsletter. It's you can sign up for the newsletter. It's free of charge on our website, www.microinsurancenetwork.org. And we will be publishing that in our next, in time for our next newsletter, which is around the 3rd week of September. So do go and read that and think perhaps about whether these lessons apply to your markets, and how that study could potentially be replicated in your markets if you don't already do similar studies. Very, very useful and rich. The other thing that I would like to say is perhaps a little bit of a punt for our long-standing member Senfree, who also was instrumental in actually carrying out a lot of the FinScope studies in Africa that Michelle mentioned. So thanks to Dubel and his team for the excellent work that they've been doing there over the years. Last chance for a final sentence from each of you, and then I will hand over to Kleini. Monnida, maybe in the order that we've spoken. Monnida,
okay.
Yeah.
Sure. So for my part, I think customer journey is very important. And when we design customer journey, just imagine that what are the best customer journey that we experienced so far. So if we apply that to insurance, will be successful in terms of developing the target's customer journey. Don't reinvent the wheel and just like go with what we get used to the most. And I think the adoption rate for online insurance will be better. I hope next time, if I have a chance to come back and we done the same similar questionnaire, the percentage of people who say, yes, I have bought insurance online will be higher. Thank you for today.
Thanks so much, Monnida. Rossi, very quickly.
I just want to briefly say that actually providing adequate insurance coverage and protection for the consumers, and especially the vulnerable groups of the population, is a complex and quite challenging task, and it cannot be done by a single player only. The combined effort will be the one that will bring effective results. And I hope it will be, I see this is the case, and we go in this direction. So I think this is the way to continue and to go. Thank you.
Thank you so much. Philip, perhaps on behalf of you and Michelle, I think she had a hard stop at 12:30.
I just want to conclude that the use of plain language will definitely benefit consumers, especially also in the insurance industry. And lastly, I think it will also improve confidence in the insurance industry and increase the uptake of insurance.
Great. Well, thank you. Thank you all very much indeed. I think very strong message. Michelle, you are here. Would you like to say one last?
Maybe just link in with Philip. I think to link in with plain language, as I mentioned, disclosure is important, but not so that a consumer is overburdened, and that needs to be balanced by the duty of consumers to also disclose on their side, because insurance, that's basically the only duty on consumers, is to disclose, to assess the risk. And I think that would need to be better balanced between the duty of the insurer and the consumer.
So some strong messages coming out there, for which I thank you very much, about walking in the consumer's shoes, seeing things from their point of view, imagining yourself as the consumer, which indeed we all are, acknowledging that this is a complex and challenging task to reach scale in financial inclusion and inclusive insurance particularly. And in order to achieve results, in addition to really becoming way more customer-centric than we may tend to be, is to acknowledge the need that we all need to work together. This is about collaboration and partnership in order to achieve this very, very necessary goal in a world where 4 out of 5 people on the planet still do not have adequate access to to the insurance and risk management tools that they need to confront the challenges that face them every day and when there are disasters that strike. So thank you very much to all the panelists. Thank you to all the participants. And without further ado, I shall hand over to Kleimi.
So thank you, Katharine. Thank you for moderating the last session and with the final remarks from your side that collaboration is very, very crucial. That's why we have this conference. So thank you very much for your attendance on the Inclusive Insurance Conference dedicated to the CEET region. We have very interesting 2 days with 4 working sessions, 19 speakers, including the facilitators. It is fascinating that we have almost 170 participants from 44 different countries that follow the conference. I truly believe that you have enjoyed and found beneficial the presentations and panel discussions. Before we conclude the conference, I would like to share with you some of the important takeaways. The most important message is that inclusive insurance could be a win-win situation for consumers, insurance industry, government, and society for the well-being of the CEET region. Besides of existence, the barriers such as low income and affordability, focus on wealthy and corporate segments, there is a significant room for growth due to the increased focus of the region on innovation and digitalization. There is a need to further promote of public-private collaboration, regulatory action, and financial literacy and risk awareness. In the first session yesterday, setting the scene, the most important consideration were that the current product and processes need to be completely re-engineered to meet the characteristics and preference of the low income and underserved market. To make insurance product inclusive, it should be simple, understood, accessible, valuable, and efficient. Furthermore, to promote inclusive insurance, regulators should use the flexibility to tailor their implementation of regulatory and supervisory requirements. We learned that Albania was the first country from the region involved in the Insurance Inclusive Innovation Lab organized by Access to Insurance Initiative. The lab could be a very valuable experience in discussing and finding solutions to overcome barriers and support the development of new products fit to consumer needs. By this, I would like to encourage the supervisory authorities from the CEET region to follow the Access to Insurance Initiative announcements for the new application. Also, what we learned from the industry perspective, there are some deliberations to cover uninsured segment. However, industry has necessity for volumes and cost optimization to make insurance more affordable. Second session yesterday have explored the topic of agro-insurance. Insurance penetration for agriculture is low. Besides that, many countries from the CEET region are highly dependent on agriculture income. Insurance culture is not widely developed, and one of the main barriers is the ex post direct compensation from the government sources based on political priorities. Government payment losses are inefficient compared to efficiency, speed, and cheaper service than insurance. There are some positive developments, but still in the early stage of implementation, like initiative on designing insurance pool, innovative parametric products. Also, what we need is reliable regulatory environment. Harmonization of regulation would allow selling the same product across different countries. Also, subsidizing agriculture insurance makes sense. Digitalization is very important and powerful tools for increasing the access to insurance. So the first session today was dedicated to this topic. We could see that the CEET region is still in some stage of development of digitalization, but the pandemic provided a push to the insurers to use innovative technology to improve distribution, manage claims, and client engagement. Next, the new models are emerging. Either they be embedded insurance products or leveraging advanced data analytics and satellite imagery for agriculture insurance. We learn again that regulators and supervisors have an important role in fostering the digitalization with a balanced approach that will encourage innovation while still managing market stability and consumer experience and protection. Approaches like sandboxing, innovation hubs are some of the tools that are helping regulators to do so. Behind being digitalized for inclusive insurance means adapting how we design products and distribution to reach the underserved markets and customers. For this, insurers have to transfer themselves and their market approaches to a digit-first mindset, engage and enable InsurTech and other technology players in the insurance space. All this has to be aided by innovative and enabling regulation and supervision. So in each aspect, as you can see, regulation and supervision, it's very, very important dimension. The last session was focused on client and drew some very important discussions. Need to focus on customers and ensure to have regular and appropriate communication with them. Financial literacy is a key to uptake insurance. All stakeholders need to contribute to consumer education, like insurance industry, again, regulators, NGO, academic institution, government. And this is crucial for sustainable development. Financial literacy needs to include insurance as well as it is sometimes left out. Important to use plain language in insurance to better reach consumers and improve trust. On the very end of my closing remarks, also I would like to inform you and to remind you that on the Access to Insurance Initiative website, you can find the report on inclusive insurance landscape for the CEET region that yesterday was launched. Furthermore, I would like to inform you about the upcoming traditional global international conference on inclusive insurance that will take place from 25th to 29 October, hosted by Munich Re Foundation and Microinsurance Network. And at the very end, I would like to express my sincere thankful to the host organizers that support the organization of this conference. My greetings goes to the Insurance Supervision Agency from Slovenia, Access to Insurance Initiative, and IIS, Microinsurance Network, and Munich Re Foundation. Gorazd, Christina, Hannah, Teresa, Katharine, Asir, Dirk, Bettina, and all of your team have did a fascinating job. So I wish you to all of you a good health, look forward to further inclusive insurance development. And once more, thank you for being with us. So with this, I would like to conclude the first Inclusive Insurance Conference dedicated to the CEET region. All the best and hope to see you somewhere in life.